Curious to hear your reaction right now. Of course, you wake up this morning, you see that everything is selling off. Now it seems like we're taking a little bit of a breath. What's going on?
Sure. I mean, I would separate the price action we saw last Friday, which I would characterize as very much fundamentally driven, versus the price action we saw over the weekend and then to the open today, right? So if you look at like last Friday, what we saw was a broad-based increase in equity volatility across indices, across markets, U.S., Europe, Asia, on the back of, worse than expected U.S. data and growing fears of recession. Like that's, very well understood and well deserved. And then you look at what happened pre-market today with the VIX, exceeding highs that we haven't seen since March of 2020, with no change in really any macro fundamental news. Sure, we got, the big sell-off in Japan, but in terms of what has changed for U.S. equity markets over the weekend, nothing. So to me, the price action this morning and today is very much positioning driven. It's very much liquidity driven, whereas the price action we saw on Friday was much more fundamentally justified.
Let's talk about the VIX for a second, Mandy. Shonali pointed out earlier that we've only seen it peak above 60 3 times since the 90s. Here's a one-day chart, and you can see, the moves have been massive. At one point, we were over 65, and now we're under 40. It's still elevated. What is the activity in the VIX telling you?
So last Friday, of course, we're just getting started on the trading day today, so we'll see what the numbers end up being. But last Friday was one of the highest volume days we saw in terms of VIX options, over, I think, 3.5 million contracts traded that day, the highest since Feb 18, which was obviously the big, Volmageddon episode, and higher than any point that we saw during COVID, which I thought was very impressive. But in terms of actual flows, I would say it wasn't all panic buying of hedges. We saw plenty of monetization of existing hedges. This is a theme that we've been highlighting for a while now. For all throughout this year, even as VIX was kind of hitting really low numbers, we saw record activity in VIX options as investors were kind of playing for that unknown, exactly what we saw over the weekend, right? A liquidity-driven or a geopolitical-driven event that really spiked volatility. They don't know when it was going to hit, but we definitely saw the buildup in terms of VIX option buying and option activity in the lead up to this event. And on Friday, we saw plenty of monetization of hedges, as well as people playing for a normalization of volatility. What I thought was interesting was actually we saw a bigger increase in volume in VIX puts than we did in VIX calls, which kind of tells you that people are potentially playing for that retracement or normalization and volatility going forward.